Hello traders, this is Damien again here to make this video for you. It's been a while since I've made one, so bear with me. The first thing I want to address is harmonic expectations. It's always important to scroll out or zoom out and take a look at the overall general framework of what the market is, what the market's telling us. And here the market is making a higher low, new structure high, higher low, new structure high. Now, could we have predetermined any of these termination points simply by going off of harmonics? One of the things that you want to do is find a clear low and a clear high and draw that line. And then take that line and say we have this line here, take that one too. And then just move them upward into the next level of structure. And you'll see that in this general area you would expect price to find exhaustion and attempt to correct as you have two harmonic termination points. Taking that one step further, bringing this to the next level, and you see we have the same situation occur where we can predetermine where the market is likely to find exhaustion with our harmonic expectations. They are extremely powerful and a tool you should utilize when forecasting the future path of price. Price is already telling you it wants to go higher by producing a higher low and achieving a new structure high. The expectation is a higher low and a new structure high. Where is that higher low likely to come back to? Well, it's likely to come back to an area of structure. Here you see very weak overall general pullback, so the expectation is for a strong new structure high. A strong new structure high will have you in this general area. Okay, so having said that, okay, it's extremely important that when you're projecting the future path of price that you use harmonics to help you accurately and realistically forecast where price is likely to find exhaustion and where your profit targets should ultimately be. Extremely important. Okay, now getting back into this pattern, okay, of the Cypher pattern that was posted earlier that failed, and the question was, why did this pattern fail? Now, I chose to make this video on the actual pattern because I always tell you guys that it's not about pattern completions, okay? It's how that pattern completes, okay? And where is it in the context of what's happening, okay? And we need to evaluate the price action leading into that pattern completion point to help us understand whether that pattern has a high probability of succeeding or a higher probability of failing. In this case, we're going to take this pattern, we're going to break it down, we're going to dissect the order flow and the price action to come to a realistic expectation as to what should occur. Okay? Now, I have also mentioned that it's not uncommon to see pattern within patterns and patterns back to back with other patterns. Okay? So over here, going into this, we already have an ABCD completion right here. We also have a three drives pattern. So we have a lot of exhaustion in this general area, okay, that would signify to us that this market is severely overbought and should have a strong sell-off or a strong reaction to this area, because we have multiple higher time frame patterns, we got mid-range patterns, and then we also have a short-term Cypher pattern that completes right around this area. Okay, so there's a lot of things, okay, that are signaling exhaustion, overbought. I'm just going to have a really hard time overcoming all of these challenges, okay? So the one thing that you do have going for you initially is that you do have a very strong bullish trend. And this pattern, it's in the right place. It ends at an area where we should get some continuation to the upside because the trend is in fact up. Okay? Now, let's get into the pattern and let's break it down. let's remove these for a second. Just wanted you guys to appreciate the harmonics and how we can use them to forecast either major corrections, reversals, or at the very least, profit targets. Okay? Never be afraid to draw a line off of a clear low and a clear high and extend that forward and see where those areas come about. Okay? And then you can also add strength to those areas by finding longer term structure. In this case, it's not applicable, and that's not the question that was asked, so we will not do that for the sake of time. Okay? So here we have the X leg here, and then we would expect price to correct. We have a valid correction here. Okay, and then the next thing we would expect is for price to achieve a maximum of a 1414 ratio extension. Now, okay, sorry, my headphones were speaking to me. One of the things when we draw these patterns and we say, well, what do we want to include when we draw these ratios, and how do we not get confused by this mess? Get into a habit of working off of clear swings, clear lows, clear highs, clear lows, clear highs. This is just a drug out correction of this swing. This is the main swing here. This is the correction. From here to here, it's a main swing. This is the correction. We always want to grab the highest point and the lowest point, including the tails. Tails are important. Okay? They're not important when we're looking at structure. Did price achieve a new structure high? Well, to look at that, did you get a higher close? The tail is irrelevant in that analysis. But here it is important because it helps us measure the absolute high and the absolute low to see where the close was. The close falls within the parameters of the first expectation. Okay? So here we have a correction to the 50%. At this point, what's going through your mind? Well, only three things should be going through your mind. Either an AB equals CD to the upside, okay, because we didn't fall into this range. A bat pattern, because a bat pattern has a to B 50% retracement, which we achieved here. Or a potential Cypher pattern, okay? So, knowing that, we should conclude that what? All of these has price with an expectation of what? Going higher. So we would expect this structure to be broken. Okay? So at that point, we would either decide to get long here, because those are the three things that you could have here. All three things point you long. So if you wanted to maximize the efficiency of your trading and harmonics, okay, we have a pullback into an area of structure. We have some projections that we can draw forward from these harmonic moves, and we have an expectation of price either finding some resistance up here for a potential bat pattern, which gives you an opportunity to get to a break-even point at a test of structure depending on what your trade management rules are, or seeing what price achieves further higher. Okay, so I'm not going to press my shortcut key because it would disrupt my recording, and I'm going to draw an extension. And I see that price hit the 138% and respected that. Okay, so now we have an potential ABCD pattern. I'm sorry, AB equals CD, and we also have a potential Cypher pattern. Okay, now what we want to do is, this is an area that's a very good opportunity to what? Short the market, absolutely. Why? Because you have a whole bunch of harmonics that terminate in this area. You have the C to D leg to the Cypher pattern. You also have a D of the ABCs. You have a lot of confluence up here that tells you that this is a great area to short. Okay, now for this Cypher pattern to complete, we need what? A 78% retracement of the whole swing. Okay, so now we've established that we have X to A to B, B to C, and C to D. Now the question was asked, okay, why did this pattern fail? So what could we have looked at in this with the information that we have here at the pattern completion to help us understand the probabilities of this pattern succeeding? Okay, and it's really not that hard, but it's something that we tend to overlook a lot when we evaluate our setups. Just because a setup occurs on the chart does not mean enter with your eyes closed at the next bar or with a limit order or anything along those lines. It means how did your setup occur? What were the conditions under which your setup occurred? And is your setup favorable to the order flow? Is there strength in your setup or is there weakness? Are you trading from a position of strength or from a position of weakness? And that's a very important to understand, okay, if you're coming from a position of strength or weakness. We already know that the market should be extremely overbought up here and that we're going to get a meaningful correction, which tells you what? The pattern completion for the Cypher is very good from up here. You also have an ABCD and a 3 drives pattern that completes up here. What does that tell you for a deep correction? All very good probabilities. Okay, so now we need to really evaluate how price comes down and achieves that completion point to let us understand whether we need to take action here and go long or hold off because price is showing us that it's gaining strength. One of the things that I want to point out, for those of you that want to see what the pattern looks like, the newer guys, let's draw it. Okay, we always want to grab the highest point and the lowest point. We always want to do that. Grab the highest point, the lowest point, and the highest point, and it completes here. Okay, that's what the Cypher pattern looks like. Okay, now I want to really dig into this area, so I'm going to isolate the pattern a little bit, and I want to make this bigger. So here we have the first swing down. Okay, and it's somewhere around here. We can see price tries to correct, but doesn't really correct until here. Okay, we can take that and extend it forward. And we have an AB equals CD. Remember, market harmonics. The market tries to find a rhythm, and it's very good about producing that over and over and over again. Okay, and don't let the short-term stuff disrupt your thinking, because even within that short-term stuff, you have really good areas that price should respect. Harmonics are everywhere, and they're obvious. We have to train our eyes to see this. And don't be afraid to draw these lines and train your eyes. Okay? Give or take a little bit. Okay? Always start. Always start. You know, it's not going to be perfect, but always try to start it at the top. But when you have the information already there, try to find it and project it forward. Okay? Nonetheless, we see that this market is trending very nicely to the downside. What else is obvious? What's the momentum like? You know, let me draw it for you. Easy way to look at momentum is by just drawing lines from the high to the low and looking at the angle by which price achieves those highs and lows. Okay? Momentum is pretty good. It's really not losing momentum. Okay? So the next thing we want to look at is projection. Is price increasing travel or decreasing travel? What does a projection look like? Well, it's very simple. All we need to do is draw lines. I mean, you should be able to look at this visually, but if you have difficulty until you train your eyes to see it better, this is where the pattern completes. Okay, I'm sorry that this is a little crooked. We want to look at these spaces. Are we increasing the distance in projection? That's a sign that what? Price is accelerating. Price is getting stronger. As you can see, these spaces are getting larger and larger. Okay? We're not really correcting deep. Price is respecting what? Structure. Price is coming back to what? Structure. Price is coming back to what? Structure. So if price is accelerating, momentum and projection is increasing, and price is respecting structure, that means what? That there's not enough breakdown in price. So when price gets down here, what is your expectation? A pullback to structure and a new structure low. Why? Because that's what price is doing. Okay? So although this pattern completes here, although it may look blatantly obvious to you to go ahead and enter that long, especially when you see an attempt to buy at the pattern completion, okay, you should be cautious that order flow is telling you that price is strengthening to the bears, that order flow is increasing to the downside, okay, and that your expectation, although this pattern completes right now, there's not enough breakdown in price to suggest that price is not going to have a weak pullback into an area of structure and continue downward, especially when you're coming from a market that we already know severely overbought, okay, has multiple harmonics and pattern completions at this point, and you may see a deeper, more sustained correction to the downside. Okay, the proper way to have looked at this was to be on the sidelines, see how price reacts to this area. We already see strength, respect of structure, indecision, another candle, looking up. Okay, we already see price struggling, even on the short term, to do what? Produce new structure highs. And then we have a rejection signal here in an area of structure in line with what? Longer term structure. Look across. Okay, this is an area of structure, long term included, that should now what? Possibly act as resistance. We see it here, support, support. We travel below it, having difficulty climbing, should act as resistance. This is the context of what we're at, what we're trading against. What are you trading into? What's the structure look like? What does the order flow look like? Very important things to understand before you decide to pull that trigger. And if you did pull this trigger, you need to be very cautious with that long. You need to manage this aggressively. And although you need to put your stop down here, what do you need to do? You definitely don't want to close below this point, right? You know you have to be aggressive here. You know this pattern, it has a lot of challenges, a lot of obstacles for it to work out. And your expectation on the order flow at hand is not for this pattern to work out. Why? Because price is strengthening to the downside. Okay, so this is an area that if you're long here and you're seeing all this problem here, if you got short at a really good price, long, you need to protect that trade. You need to start thinking about asset protection because, okay, things are not looking good. And the bulls are not able to push price any higher, and the inevitable happens. Price continues on downward. Okay, so I want to make sure that I made this short video so you can understand the dynamics of these patterns, why it is important to not take these patterns blindly, and how we could assess whether these patterns have a high probability of working out and failing, and also, okay, the use of harmonics in general to help you forecast turning points, profit targets, or corrections in the market. Okay. We also talked about when we draw these patterns, or when we qualify these patterns, that you use clear lows and clear highs, and you don't disregard any clear lows or clear highs in your assessment of these patterns, like was done a few days back on another chart where I asked, why did you regard those other clear highs and lows? Those should have been assessed to see if that validates the pattern, invalidates the pattern, or you have a different pattern altogether. Okay. if you have a new structure high or a higher low, okay, that must be taken into account. This is just short-term order flow that makes up the overall correction. You know, it looked like there was a lot of aggression here. It looked like there was a lot of volume there, but it went nowhere. Okay, this market at this point had a one-track mind and was to go higher, like now has a one-track mind to go lower. Okay, so it's important to understand that. It's also important that when you do have long three drives patterns or long ABCDs that complete, that you understand that the people that are trading these on the longer term, on the longer term, may be trading that, and these patterns have this would have been the break-even point. The profit target is somewhere in this general area. Now, where did price find support? I don't know. Looks like somewhere around here. Not yet. What is happening here? Acceleration. Acceleration. Okay. At some point, this is going to break down. Now we have our first sign of breakdown. Okay. We have our first sign of breakdown, and now we should expect what? A possible turning point into the upside here. Okay. So now we're going to want to see what? Price retest or fail to make a new structure low, which it has. Now price is going to make a new structure high. So now we have confirmation that what? This market wants to head higher. Where is this market going to have challenges? At this level. Let's draw them. At this level. At this level. At this level. Okay. Let's erase all these lines so you can see it better. I don't want to make this video too long. Remove drawing objects. We're going to remove text. We're going to move triangles. We're going to move arrows. We're going to move lines. And we're going to move Fibonacci's. Okay. All right. So now we understand that this market failed to retest, failed to make a new structure low. That was the clue. This is the confirmation, new structure high. This market is heading back up. We know we're going to have issues here, here, and here. Okay, there we go. Issues, like I said. Expectations what? Higher low, new structure high, right? Oh, I guess that's where the last time I loaded it was here. So it becomes predictable. It becomes easy to understand where price is heading. Expectations lead the way. It's your roadmap to the markets. Use them, embrace them. Use harmonics to help you forecast possible turning points, possible exhaustion points, possible targets. Okay? Don't be afraid to draw lines. Don't be afraid to use them. Okay? Because the more you use them, the better you're going to get at them. That's all I have. I hope this video had value to you. I'll be making more videos in the future. I want to try to keep them short and concise and on point so they don't become too boring and drawn out. So, you know, feel free to post questions. Feel free to give me suggestions for future videos. As sometimes, you know, a video is a lot better than, you know, 20 or 30 posts back and forth. Okay? Thank you, and I'll talk to you guys soon.